Good morning, everybody. Good morning. Happy Tuesday to you. Happy September 2nd. If any American friends are awake, hope you had a nice Labor Day. 11:20 here in the Baltics, 10:20 in Germany, France, Spain, oddly, 9:20 in the UK. Good morning, sir. Thank you for checking in. Fly under no flag. I like it. Going to do a couple charts today. Not a real lecture, as usual. Maybe you guys are getting tired of the lectures. Let me know if you want me to chart anything in particular. But as we're back in school, I figured I'd show this one. This is a good one. Plus, there's plenty of great content out by a lot of people. This is Cena. You can't actually see his name because my face is covering it, but Cena _ 21st 21ST. Standard chart anyway here of Bitcoin monthly returns. He's got it started in August of 2010. And as you see, August, as he was saying, is August. Worst month in Bitcoin. I don't want to say by far. Where is the... Yeah, the median last 3 years, negative 8.9%. Median last 10 years, negative 7.2%. But you can clearly see sell in July and go away, or people just don't trade actively. September, much better last 3 years. And then October is really where we rip. October, far and away, the best month in Bitcoin's history. Okay, so he's highlighting here the last 3 year medians. October, November looking good. And so, again, just try to keep an eye on the prize, keep stoic, not worrying about too much noise. This is why I like looking at numbers like this. Again, if it's not broke, don't try to fix it. I know people are really freaking out about this sort of softness in price at supposedly the peak of the 4 year cycle, or running into the peak of the 4 year cycle. If we look back at 2017, we do see that Bitcoin had a rip of an August, and 2013 as well, 31%. So from that side, I understand it can be a little bit frustrating. 13% in 2021. Oh, that was already ever coming off a really big start to the year, as you see here, 2021. 2025, down in August. So I understand how people are thinking that this time is different, but we haven't closed out the year. We haven't been through the cycle. In any event, it just ends on what I was finishing my stream with yesterday. If there are going to be opportunities to lighten up on coins for lifestyle reasons or whatever, it's to each their own. But going back to the percentile model, which I always have ready at hand, this is Bitcoin and gold, sorry. But actually, this is fine to look at. These are just great looking opportunities to buy Bitcoin at these prices. Right? Gold, we're at the 40th percentile or so. So if you have gold and thinking about going to Bitcoin, it could be a great deal. And if we look at this on the USD chart, which is also the chart I have typically always ready at hand, we're right on trend. And sorry, I got to pull it up here in a second to get it back for you. But, you know, I really am a believer in if it's not broke, don't fix it. So I know everybody's saying this time is different. This time is different. I saw many of the same sort of analysis in prior cycles. And by the way, the prior cycle was different, right? Peaked here more in April, March, April 2021, and not at the end of the year, which it did in the 2 cycles before that. Here we go on back to dollars. All right. So the dollar, not as undervalued as gold relative to Bitcoin. Right on trend, you know, we can call it fair value. When I pull it into the model just now, it was 110,000 Bitcoin, 110,000 Bitcoin. Sorry, $110,000 per Bitcoin. Getting too excited. It's always possible that this time can be different or more different than the last 3 cycles. But again, I'm just not really seeing anything that makes me wonder about that. So going back to this chart, it's a nice big picture chart. We can see that for sure August hasn't been a great month for Bitcoin typically, but September, October, November typically are. Good morning, Francisco. Good morning. Buenos dias. So, with all that said, I want to jump into this one. This is a great chart. Again, checkmate. I'm sure you might follow him. If you don't, definitely do. Former Glassnode guy. He's got his own newsletter now. So his title of this tweet, nobody ever sells their Bitcoin, they said. It was all paper Bitcoins, they said. I highly agree with this assessment. Plenty of coins have been dumped as we've been on this $100,000 tear. All right, this year, showing the revived supply in dollar terms, all right, of the UTXOs. Basically, non-hodlers, anybody for sure under a year is the dark red. 1 year to 2 years, and then this one is a pretty good one. It's a pretty decent hodl metric, is 3 to 5 years hodlers have been dumping. Then you see even here, there was the, this catches that July 4th move of those 80,000 Bitcoins or more, I guess. 10 plus years UTXOs that have not been revived. Here, 7 to 10. This was when the ETF craze started. Someone got a little bit ahead of themselves going while the ETF approvals had occurred in 2024. This is the start of 2024. And of course, there's a little bit more blue here. So it always happens. It always happens. And these are just tremendous amounts of sell pressure that are coming online into the market as the price rises. And a lot are older coins. I mean, at this stage right here, you know, it's half of, okay, a little bit half of the revived supply is, well, certainly even more than half is older than a year, that we can easily say. But maybe 40% is 2 years and above, right, during this cycle. And even more here, you know, 60%, 70% of the total revived coins at this point. So the point is, again, I don't really worry about all the stuff about paper Bitcoin. There's a lot of narratives that always creep into Twitter, a lot of doom and gloom. And I just don't see it. I want to revisit this chart as well. Whoop, not this one, not this one, this one. So this is the USD value of shares traded or volume. We have This don't I need to actually show. All right. Unfortunately, I didn't do a clean run for the last month. This is only through July, basically. But it's not a fully all-encompassing global market of spot and futures. In fact, it's only spot. Whether that's a Bitcoin spot or ETF spot, Bitcoin Treasury Co spot. But the Bitcoin spot, all right, the value of Bitcoin traded in exchanges continues to dominate. All right, I know that this chart could be more detailed. I could get options and futures and more paper Bitcoin, but you do have paper Bitcoin in terms of Bitcoin Treasury Co's right here and Bitcoin ETFs right here, which barely move. This is not ETF flows, but volume. And if you just do those sort of, and also miners as well, you can barely see change of the chart. So these three things, Bitcoin publicly traded miners, ETFs, and Treasury Co's, balance sheet Co's, just very, very small minority of the total. Far and away, Bitcoin spot dominates the price. Good evening, Tim. Thank you for joining. Sorry, fly under no flag. I missed some of your comments. Let me check. Yeah. This is exactly what I'm talking about here. Whales selling and distributing coins is excellent for the balance of new holders coming in versus old. Individuals collectively, when BTC is 1 million, will have BlackRock level financial power. I also agree. Not sure about this one. We'll see. Smart contract DAO investment fund. I'm thinking about the old DAO on ETH, of course, which ended up getting hacked, and then they had to roll it back. But it is a risk in markets, I would say, if this spot, because I really do look at this spot. I know that the spot has a lot of institutions in here as well. But, just the net of what spot volume does was vastly retail, all through here. And even here where you can barely see it because it's so small. I have to zoom in. All right, this is a retail spot. Look at that, a few million a day. I actually remember very well in when did we hit $1 billion? Somewhere here, leading up into 2017. We hit $1 billion like here, yeah, in Bitcoin. I remember this time very well. People were getting excited. SegWit was about to activate, as it did here. And then we rolled into the top of this market. And just look at the spot volume, by the way. There's still a couple miners that were traded, a couple ETFs. ETFs, by the way, these are not those are not U.S. traded ETFs. There's like a couple in Sweden and stuff. 20 billion, 20,000 million, 20 billion by the end of 2017. Now we can get 100 billion a day. No problem. And we even got this fat finger or whatever this was, 350 billion on February 26th. So it's just part of I'm trying to feed into the narrative, which I very much agree with, which Checkmate said here, that it's not all paper Bitcoins. And this phenomenon, by the way, I really want to improve this, and I will. I promise you I'll improve it to get sort of more futures, more options, more paper Bitcoin contracts. You'll still see that they're the minority of trading. But, sometimes the minority. I agree that they can be the majority on some days. the gold markets are, there's an interesting phenomenon with the gold markets. If you look at the gold ETFs and things, they are huge. That is the paper gold markets. But the value of those paper gold markets is very small relative to the supply, the outstanding value of the gold. All right, so I'll show you that in a different way here. You can find this on my website. And this is where Bitcoin is actually overextending itself as a percentage of its value. It really is one of the most liquid assets in the world. And I mean that from a spot perspective. Okay, so here, let's look again. I don't have this for gold. I need to get that as well. But if you just look at other stocks, okay, here's top 10 stocks in Bitcoin. This is updated all the time on my site. So here I pulled in 65 billion. That is volume daily of spot volume. Okay, so this is all spot volume. It's not counting futures or options volume of these stocks. You know, because they're so huge dollar value funds that are involved in all these other assets and not really yet Bitcoin, they actually have very, very small, as you would say, value of shares traded daily, or as I'm saying here, units, because we have Bitcoins and we have stock shares. Units traded daily as a percentage of market cap. You know, NVIDIA is pretty high actually at 1%. And is Tesla still on here? Yeah, Tesla's really high at 2.5%. But look at the others. Berkshire, Broadcom, you know, Saudi Aramco goes to 0, or whatever it's called, Saudi Arabian now, I guess. Feta, 0.4%. Amazon, 0.3%. Microsoft, 0.3%. Apple, 0.3%. And then Bitcoin, 3%. Okay. And Bitcoin has a way more stable fundamental value proposition than Tesla. Undoubtedly. What is this? I need to look this up. What is this Chinese company that's competing with Tesla like crazy now? BYD, is that what it's called? Is it BYD? Yeah, it's BYD. Let me look it up. There's a hilarious chart. Find it here in a second. Right. Okay, so this was from a month ago. Just look at this chart. So the fastest growing company, BYD, has a price to earnings ratio of 8, which means it's trading cheaply. And the company with the declining sales and profits has one of 89, which means it's trading expensive. This is astronomical. I mean, you even see these are pretty expensive for the big juggernauts, but these have real like networks and whatever. Tesla, yes, it has a network too, but it's way, you know, again, I'm not a fan of necessarily either Tesla or BYD, let's say, but the PE here from a company that is growing way more than Tesla. Here you see it's the, what is this, revenue change? Yeah. TTM revenue growth is this. Tesla's down. All the others are up at least. NVIDIA, of course, is up big with the chips. And then you have this PE multiple. All right. So again, PE basically is how many years the earnings would make up the market cap. 189 years. So, you know, if I go back to this chart, I always lose my place. Sorry. If I go back to this table, this is clearly some crazy pumping and dumping, and just, in my opinion, too volatile of trading. And this is, again, just spot. This isn't like paper Tesla shares. This is just spot. This doesn't include options or whatever. So, Tesla trades pretty, it turns over a lot relative to all the other top stocks. NVIDIA, the next best at 1%. But Bitcoin, completely different market. As you and I know, dear viewer watching this, Bitcoin is a completely sound market, growing higher highs, higher lows most of the time. Most powerful, secure, decentralized network in the world. We can do $65, $100 billion a day in spot Bitcoin trading. So it's just, it's incredible. It's a liquid market. And by the way, a lot of that is factored in right here. I mean, the majority, I would say, is factored in here. This is the trading of on-chain coins, which goes into mostly spot volume, which is the chart that I just showed you. So point is, I want to get a more encompassing chart than this. This isn't like, this doesn't have all the futures and options, which are now coming online. But the point generally remains that Bitcoin is super liquid. It's not a function of just some scary paper Bitcoin leveraging that exists in all markets. You can have crazy valuations in certain markets, i.e. Tesla. But Bitcoin doesn't have any of that, in my opinion. Maybe it will someday, but certainly not now. Okay, here's another thing. Why Bitcoin is, again, I've shown this a lot, but why Bitcoin is so small relative to the current system, and how big it can grow to. There really is there's no way to say that Bitcoin is like overheating or something relative to what it does. We can run those metrics, right? I have done the PSR and everything else. Like it is running hotter now, but it's not due to any paper Bitcoin or whatever. It's more due to the cycles. And Bitcoin is just so much smaller than what the financial system itself does at its core, which is Fedwire, which is only one of all the global currencies. All right, at $1.1 quadrillion. Yeah, I'm absolutely not. I agree that, like, I wouldn't invest in a Chinese company anyway, Jimmy. So I'm not absolutely not saying that. I'm just saying, comparably, Tesla looks like a company that's trading hot, and this isn't even looking at paper, options and futures. I mean, obviously, this is just price, but here, this has just volume of Tesla shares. It turns over a lot for a company that's probably overvalued. You can do the math of if that's really like a good thing or something to hold for a long-term prospect. So this is my thoughts on paper Bitcoin. I'll get there with more charts. These are, I've told you guys, $10,000 per year Glassnode subscription is even too rich for my blood. So I'm trying to build my own UTXO sort of set there, which I can analyze. But then when you go outside of the network and you start looking at things like paper Bitcoin, spot, futures and options, open interest, it gets even more cumbersome. So we'll see. But in the publicly traded markets, for this isn't fully encompassing. This isn't every Bitcoin balance sheet company, but you can say, like MicroStrategy is included here. Okay. So it's not like it's dominating the printed chart price of Bitcoin. Okay, here's another one. Also, why I think Bitcoin continues to look completely stable relative to other assets. Again, doesn't mean we couldn't have some pops here, and I would actually count that we do from the 4-year cycle because we had them here. All right, in 2020, we had them here in 2021. And think about that. This was collapsing. This was a collapse in price. I should have had the price on the right side, but this is Bitcoin falling to $3,000, right? 10%, 30-day rolling vol, and this is Bitcoin pumping to $60,000. Only, quote, only a 5.8% vol. So, and now what's the trend line? Is the average vol, all-time average is 4.2, trending down, and you see the trend line, which is probably a better way to look at it, is lower, 3.86. Also a power law, by the way. So another interesting, power laws are found often. Sorry, let me go back. So if we go back to 2017, there were big pumps here. Ethereum was pumping with ICOs over the summer. This is Bitcoin. And then we get up to December right there. This is the top in Bitcoin. 30-day vol goes up to 8%. All right, that's a daily. It's a daily vol. It means 2/3 of the time, Bitcoin's price went up or down 8%. That's what the vol definition is. 2/3 of the time, it's a standard deviation of the daily price changes. So it could go up or down 8%, topped out in 2017. And then 2013, of course, we know it's going to be even more volatile. We had two tops here and here, 8, even 9% daily vol. And of course, we get back up to like 20% back in the day here. 35% even. So, point is, you run averages, you run trend lines. We're looking better and better. And these are the reasons, in my opinion, why we're having, more stable. Obviously, by definition, we're having more stable price action. But it's also why we're not having, maybe the crazy Bart Simpson moves or the crazy booms and busts. But again, I want to be clear. I still believe that, you can have these pumps. Might not be to the 90th. This might be the time where we break this idea, right? I'd need to analyze it more to say if I would like proclaim. I think you could probably proclaim the cycles pretty tamed. The 4-year cycle's pretty tamed if you didn't get to the 80th. All right, this is a good analysis, by the way. So if we didn't get to the top 2 lines here, then I would personally say, like, okay, we're kind of, looks like we're done with these cycles. Because look how easily we passed. Look at the 8, number 8. We started to pass it in summer of 2017, all right? Already in December of 2020, bumping up. I remember this time well. People were locked up and we were screaming up to 20K at the end of 2020. Let's go back to 2013. We hit this twice easily, all right? We hit it in March and then also in, October. And by the way, the double top is a nice, that's a good fake out for anybody. It's not easy to play. I am not saying I'm an expert trader or anything. If you look back at the 3 cycles of Bitcoin, we had 2 years of double tops. One where it shot higher by a factor of like 5, right? Because it went up to 200, and it topped out over 1,000, 1,200 on markets intraday, right? And then another one where we had a double top 6 months apart, 7 months apart. Only one time in 2017, after a long, protracted bear, did we have a pure, clean sort of blow off. So what I'm saying is, keep calm. Personally, I totally think we're going to hit at least the 8, probably the 9, probably higher. Just looking at these trend lines. It's nothing magical. These are very stable, like trend lines. Like this shows a lot of data in these lines. And if Bitcoin stayed under those, or like somehow this was the top, or, or if it just stayed around the power trend line, okay, then I would make the claim that, okay, the 4-year cycle is pretty much done. But there's, it's too early to call that in. It's way too early. What do you guys think? Good morning, RV. Hello, Dean. Paper Bitcoin just means options, futures, Bitcoin treasury companies, Bitcoin ETFs, Bitcoin miners. This is investing into an entity that is in some way levered around the Bitcoin network. So the cleanest way to measure non-paper Bitcoin trading is here. Sorry. Here is the orange. It's Bitcoin spot. All right, that is like non-paper Bitcoin. Institutions, individuals trading on crypto exchanges. All right, that's the bright orange. And then I'm denoting paper Bitcoin as Bitcoin treasury companies, Bitcoin ETF volume, and Bitcoin miners, which is much lower. But I want to be clear. There is a lot of paper Bitcoin in futures and options on exchanges, which I don't have here. So that's true, that there is a lot there. Yes, exactly. This is when you run your Bitcoin white paper. You put out a Bitcoin white paper to invest in 22 million Bitcoins, and you sell stock to do so. It's still my favorite quote. Perhaps you've heard me say it. Is a guy named Rick Rule. He's a commodities trader. I used to follow him from a couple newsletters, and the commodities markets, by the way, runs on so much hype. Let me get this and pause this. This guy, good guy, very expert trader, but he's going to run circles around retail investors like anybody. Look at this clickbait. Start buying these commodities ASAP, right? Run some funds, commodity funds, whatever. But he has said this quote, and if you've tuned into gold podcasts, or a lot of these newsletter podcasts, which have a lot of old boomers which love investing in gold, they talk about mining companies a lot. And one thing that this guy has said, which I agree with, it's perfect, is he says no matter how good you think the government is at printing money, the free market will always do it better. And that is 100% true. Okay, so that is penny stock investments, gold miners, gold ETFs, gold leverage plays, gold funds. That there's no amount of commercial paper that is not sitting out there ready to take your hard-earned dollars from your paycheck and invest into their stock certificate shares. So that's the idea. And yet, I would say, with all of this paper gold floating around, I don't have a full chart here, but I got to get it for you. But basically, I don't want to necessarily say paper gold is more than paper spot because I don't have the data there, but well, here's something funny. Even paper gold, like gold ETFs, let's just stick with gold ETFs. I know for a fact that the volume of gold ETFs for like 10 years is less than this Bitcoin spot. So, and gold itself is worth more than Bitcoin. So that's going to tell you one of two things. One, Bitcoin is overvalued with its trading. I don't believe that. Over-levered, overhyped, whatever. I think this chart even clearly shows it can sustain itself for a long time. Or two, paper gold is not that big a deal. I'll try to put this into a chart to explain it more with, say, gold. You got to kind of keep consistent because there's so much data out there. I probably will do ETF volumes. So like Bitcoin ETF volume, gold ETF volume. And you can look at it. Both are not that significant, but both are way smaller than Bitcoin's spot volume. The point is, it's not the paper that's, manipulating the price. There's way more things going on here. Like, for example, 2011, 2012, 2013 whales dumping as, they're just ready to cash out. They're ready to do something else with their money. Might not be a smart decision from them. I mean, although, again, if you have 10,000 Bitcoin and you want to drop 1,000, I could understand. Or even say 1,000 Bitcoin and you want to drop 100. I can understand why some people, after all these years, want to do it. So it's not the paper. The point is, it's not the paper. There's another one actually. Checkmate has done here. Let's read it. So this person says lots of holders rotating out of BCC and into ETFs to utilize TradFi benefits. This is exactly what I was saying, by the way. It's not even close to the same magnitude. Orange equals profit-taking volumes. That's on-chain. Green is ETF flows. All right. So this is not exactly what I showed you, but it proves the same point. You can't take this amount of profit on-chain, which amounts to $80 billion, all right, of supply chain moves, when only ETF flows are, like this. And this is ETF flows, by the way. Those are way more valuable. Those are way more higher in dollar amount than I was showing you here, which is ETF volume. Okay. So funds like ETFs, electronically traded funds, they track both flows and volume. Volume is like the trading of those shares, but flows will influence the value of those ETFs way more. This is not volume. So this is not flows. This is volume. So it only gets up to, 8-10 billion. He has flows here, which actually look pretty similar, but it should be a little bit more, like maybe 10 billion more consistently, right? So it's a little bit different. Either explanation proves the point. On-chain movement of realized gains is way bigger than what happens in ETFs, quote unquote paper Bitcoin. Again, this is not the same thing, but you can overlay these numbers with my spot chart here. All right, so let's look actually when this chart. The start charts in January. This chart starts in January 2023. So let's go here. All right, so this is roughly lining up. This is stock. This is Bitcoin spot volume. All right, and this is on-chain volume. So two different things. But you can see here it tops out at 100 billion at the end of 2024. End of 2024 here, I'm up to 150 billion, 130 billion. Okay, so That'd be another calculation. You could overlay these things. It doesn't mean that on-chain movement, you could just pay someone. You could be running an investment. Doesn't mean that if you move coins, you're immediately selling it to an exchange. It probably mostly means that, but I don't know. I can't say for sure. But you can see sort of the clusters of movement here, here, and here, which matches up with these movement in the chain. So again, this is actually the better chart to show you to prove my point, is that it's not paper Bitcoin. It's not paper Bitcoin. Here's this. And now let's look at ETF volume. It's nothing. You have hundreds of billions, 133 billion, 149 billion here, but mostly tens of billions of spot volume. And you have maybe max 10 billion of ETF flows and volume. So there's your, hopefully another explanation, Dean, to what paper Bitcoin is and why I don't think it's a problem. This is all has to do with a narrative of like markets are manipulated, and there is, the game is always going to be tilted somewhere, but you have to step in and play the game first to even have the chance to be scammed, and that is a risk for everybody. Caveat emptor. But Bitcoin is by far the best balancer of capital, worldwide. And I would say look to this table again to see that. This is a massively liquid market, right? Look at that. 2.2 trillion in value, trades 65 billion yesterday. %3 of the total. Spot. All the other ones, except for, goofy Tesla, go under 0.3%. And NVIDIA, which is running hot right now for obvious reasons. Yeah, it would be good to have Glassnode's subscription, but I don't know. Too expensive. So that's where we are. This is also huge. Again, this is just very important for stability, market maturation. Excellent chart. I saw Ken Rogoff recently tried to say that he was wrong about Bitcoin because of XYZ. He didn't imagine that governments would print as much money or people would believe in some stupid digital asset, whatever he said. The proof is in the pudding here. It just does not matter what economists say. By the way, I feel very strongly about that as it goes to the old stock to flow models. So I talked about that yesterday. I'll have some more research of that published very soon. You can watch out for that in light of certain analysts continuing to revive and act like that is something that Bitcoin, where you can model Bitcoin's growth on. See yesterday's stream for more on that. That's most of what I had for today, guys. Let me know if you want to see something else, but we're moving up. Yeah, it's been very soft this year. Oh, sorry. This is in gold. It's like it hasn't been that soft. It's been very soft this year, right on trend in dollar terms, right on trend since early 2024. Okay. I'm not going to complain if we continue on this beautiful trend line forever and we increase this R squared. That's going to be great. But I'm certainly not discounting pumps like this because they've occurred like this before. It is true, by the way, it's also very true. Let me show you the top 90th percentiles of this chart, the top 10 90th and above. And it is true that we get lower and lower every year, every cycle. But are we so low where, again, you don't even get above the 80th percentile? I don't see it. We very easily get into the 80th with each cycle. So let me show you here again. Again. Here's the top 90th now. So same type of a chart, but only looking from the 90th and above. Okay, the 100th is not going to happen. It's like way far away. We only hit that in 2017. But the 99th percentile, based on the multiple above or under the trend, which is now only mostly under. Here it was lower, but we easily got to the 99th in every prior cycle except for 2021, okay? So in 2021, we did not get to the 99th. We did not get to the 98th. And we did not get to the 97th. I've showed this many times. Now, it's totally possible that we don't get to the 97th now. Like we take away a few of these bands. 100% possible. I don't deny that. So let's just say we take away 3 more. 97th was already taken away. Let's take away the 96th, 95th, 94th. I know these are hard to read, the yellow ones, but so then that only takes us to the 93rd percentile, which is the key number here is the multiple above trend, 2.3x, okay? So let's just say we only get there this cycle. If that's the case, and we assume that somewhere at the end of this year, all right, then there's your targets. There's your targets for next year. 125K trend, 90th percentile remains the 2x, the trend 250. And now, remember, I've been saying 3x based on prior cycles, but say we even go lower, 2.3x, 295K. And that would just represent a sort of gradual dampening of the tops every cycle. You know, give ourselves some room to not have this craziness. Even though we hit, the 96th a few times. And the 95th and the 94th. So I took away 3. 94th, 95th, 96th. I do not, unfortunately, Francisco. It's just these are very heavy, locally made charts every morning when I stream. So I talk about this a lot. I know people ask me all the time. I have this one, as you know. I'll try to get more, but it's just it's a lot of data. If I can do the 10 percentile ones, I'll try to get that on if it's not too much. You know, it loads really slow with what I have and everything, but I'll try to get it up there. A lot of people ask about the power law itself. This is, let's go to, I think it's b1m.io. Okay, you see b1m.io. You see that right there? A lot of people have asked about this. So this is Fred Krueger and co. They've put this out, which I think is very good. It's the same curve. Theirs is a little bit different than me. There's a little bit lower, in fact, which is fine. I talked about it yesterday on the stream. Still way better than any stock to flow model or any other fit that you'd have for Bitcoin. And that's what they have for now on their site. I'm sure they'll improve it. They have this dashboard as well, which gives you the target prices at different dates: 2045, 2035, 2030, 2025. They do it in gold, M2, which I wouldn't recommend putting too much stock in, frankly. S&P 500, which is good. And then here they show the asset class changes of different asset classes. Bitcoin wins 8 out of 10 years. S&P, this is weird actually. S&P 500 should win more without for Bitcoin. This is kind of funny. If you took away Bitcoin, S&P 500 would win probably many years. It would win here. It would win here. It would win here. It's kind of a confusing way to say it, frankly, but I would rather rank these every year, but it gets cumbersome. But anyway, yeah, I understand. I know everybody wants to see these, but it's just like I have a lot of back end work locally. This little chart engine is just something I host locally on my computer, and it's just I change the code a lot. I tweak things to make it better that I can stream. It's just easier for me to stream. And, a lot of these charts are tweaked every morning, even before I start streaming. Although there is a lot of automation too. It takes time. It's like here for this one, I don't have it. Sorry, it's for this one. I still haven't updated it from July. Anyway, lots of data. But I would say probably, I'll sign off soon, guys, just because I got a lot of other things coming up today. But, I've seen these hype cycles a lot in the gold markets, the silver markets. Bitcoin has that similar vibe, right? It's sort of counterculture. You're worried about the global financial system. I see a lot of the same scare tactics around the Bitcoin markets that I have seen in the gold and silver markets, and they just continue on. It's not like it's anything incredible. Bitcoin, of course, is way different in that Bitcoin has a power growth which is sustainable and awesome and very strong, stronger than any sort of R squared that any of the other markets would have for exponential. So that's why we stick with the power curve. And then last thing I would say, I finished the stream off yesterday. Again, say that somehow this is really the top, the actual trend line itself, which seems weird, is going to be the top, and it's going to pull, the next bear is going to pull this back down. So it will pull it back down. Then we're going to have to, you'll get changes pretty quickly in the percentile bands. And then all of these positions here would be great buying situations. But to be clear, I don't actually see that. I see the hype. I can see people talking about it. I can see strategic reserve, all this other stuff, and like it or not, we're on this 4-year sort of halving cycle. I can't tell you when we will get above these maybe 80th to 90th percentiles, but the fact that we have every 4 years, to me, is a no-brainer to, at least hold through these bulls. And then maybe on the way down, if you want to have a lifestyle sort of lifestyle play where you're going to take some chips off the table or save some to buy back later, hopefully you can do it. But that's to everybody's own appetite for risk, I guess. Hi, RV. Yeah, email me about this. if you can. I'd be happy to do that. I need to figure out. I would like to still automate it though, because I do have this automated. The power law itself, this black line, is automated, and so I wouldn't want to tweak the coefficients every day manually. So I just got to figure out how to upload it into TradingView. But yeah, TradingView no doubt is a better market or a better, bigger network than me showing this stuff on YouTube. But I still think you guys have a good access to some stuff that typical traders don't look at. Okay, guys, with that, I got to sign off for today. Thank you for watching, as always. Don't panic. Don't worry about paper Bitcoin. Hodl real Bitcoin. Take care, guys.